Well, it's once again turning out to be a day of declines for the Indian markets, and Nifty as well as Bank Nifty, they both are seen to be reeling a bit under pressure. Because what we are seeing right now is once again the mood spoiler IT pack that is not doing that well. Tech Mahindra, of course, is one of those top losers throughout the day, and we are also waiting by to see what Wipro delivers on the street numbers. Other than that, what's not doing well actually today is the whole lot when it comes to select financials. They are not participating much because IndusInd Bank, Axis Bank add to that list, which is also one of those earning candidates, is one of the top losers on the Nifty 50 side. But what's doing well actually is select FMCG counters, select metal counters, select pharma counters. They are actually bucking the trend, and these defensives are making a good comeback in today's trading session. The tire counters continue their uptrend, and along with that, select chemical counters are also doing well in this market as well. But in Snehi, a lot of these newsmakers and especially select earning candidates.
Absolutely, Shrishti, we are seeing some earnings reaction still trickling on Tech Mahindra, so that pressure continues to be there. Just to revisit what Tech Mahindra's Q1 numbers look like, revenue in terms of rupee, revenue was lower by 0.2% on a sequential basis. EBIT has gone up by 5% on a sequential basis, but the management commentary sounded slightly optimistic, but nonetheless the stock seems to continue to be under pressure as we speak. Another stock that's in focus right now is Mahindra Logistics. Rights issue has been announced at 277 rupees per share, with the exchange ratio being 3 shares for every 8 held. The record date for the same is fixed on 23rd July, so Mahindra Logistics spiking up in trade as we speak. A 5.7% uptick is what we're seeing on the stock right now. Sterlite Tech continues to be in focus. They've collaborated with Hygenco Sustainable for optical fiber manufacturing, with green hydrogen as one of the major milestones that they want to achieve in terms of sustainable manufacturing. So, well, that's a positive news flow for Sterlite Tech, and 2% uptick almost is something that we're seeing on the stock. Other than that, from the Nifty 50 group of stocks, we have some gainers and losers that are continuing to hold on to their respective moves. Tata Consumer has bucked up very nicely in trade, and that was Charan's call earlier in the day as well. A 2.4% uptick coming in on Tata Consumer. Another Tata group of stocks, Tata Steel, is doing very well. A 1.5% uptick coming over there, along with Tani Enterprises, Hindalco, Dr. Reddy's and JSW Steel joined there by a Titan. What's not doing well, like we mentioned, pressure continues for Tech Mahindra, almost 2.5% lower. IndusInd Bank today is reeling under some pressure, joined there by SBI Life, Infosys and Axis Bank, wherein all eyes are going to be on Axis Bank because their numbers are going to be out soon as well. But Axis Bank, ahead of earnings, we're expecting a soft quarter, so ahead of that, 1% cut coming in on Axis Bank. So at least from the Nifty 50 group of stocks, this is what is happening. Nifty Bank is taking a solid dip in today's trade. About 0.5% lower is where the Nifty Bank is as we speak. Apart from that, in terms of the broader market moves, Varun Beverage is continuing to do well. CG Power in the entire capital goods theme is also holding up pretty nicely, along with Torrent Pharma and Jindal Steel. Today, what's not doing all that well is Interglobe Aviation. A 2.5% cut is what we're seeing, followed by HAL, Canara Bank, SBI Life. So these are some of the losers today. But we have Sharan, who's joining us in the studio to help us make sense of some of these moves that we're seeing on the benchmarks today. And Sharan, well, not all that not a very exciting day, if you could call it that, for our expiry today. Rather lackluster. What's your view on the trading session we've had so far?
Firstly, I think it's not exciting because Jane Street is not allowed to trade. But despite that,
let's say we decide that. But yeah.
So basically, very similar kind of moves like yesterday. Very boring market. A day up, a day down. I think it's consolidating. Good resistance around 25,250. Immediate support around 25,100. I think the whole market is just waiting for the result season to get over. Like we spoke on Axis Bank yesterday, I think it's hitting its lower end of support. So let's see, results are today, and I think at the end of this week we can actually see how the Nifty moves, and I think post a few big names and the results are out, we can see good movement in the Nifty going ahead.
All right, so let the week decide and the earnings decide. Actually, one day left for the earnings, but today is going to be indeed a crucial one because Axis Bank, Geo Financials, Wipro, they will be coming out with their numbers. But the numbers have also come out for HDFC AMC, and it seems like a good set for this particular company this time around because the revenue has seen a jump of 25%, but it's the net profit that has seen a jump of almost 17% on a sequential basis. 748 crores is what the company has reported, and that's sort of a theme that we have been talking about, Sharan, that the brokerages may find it tough for their businesses, but the AMCs rather, given the strong SIP inflows, they can do well, and that's very well reflected in the numbers.
Definitely, Shrishti.
What
I
are the
think,
charts?
yeah, the money is moving away from options and futures and into SIPs. I think people are more concentrated on wealth generation rather than short-term trading. So charts are very good for the whole AMC pack, UTI, AMC, Nippon, even Aditya Birla, again HDFC hitting all-time high. And whenever stock hits an all-time high, I think there is no high to it. It can easily reach levels of around 5,700, even 6,000 odd. So over a long period, again I've mentioned 3 to 5 years, very good for this sector. Stick with it. You'll make very good money in the next 3 to 5 years.
Okay, so that's the take on the entire capital market related theme. But while we are talking about financials and we spoke about earnings, let's revisit what we're expecting from Axis Bank. That bank is all set to report its Q1 earnings, and we're largely expecting a softer quarter this time around with asset quality deteriorating and margins to be under pressure. My colleague Varun who tracks the sector closely, is joining us with what to expect. Varun.
Well, we are expecting a soft quarter from Axis Bank, wherein the net interest income, they are expected to grow in the low single digit. We are expecting the net interest income to grow by around 2.5% and the PPOP to grow by around 9.9%. The slippages are expected to grow in this quarter. It would grow by around 25% on a quarter-on-quarter and year-on-year basis. So definitely it will have an impact on the overall profitability of the company, when the profits are expected to grow merely by 5.5% to around 6,370 crores. Now the slippages are expected to grow because of the stringent provisioning practices or the policies that the company is undertaking. That will impact the overall slippage of the company and also the profitability of the company. The loan growth, the company is delivering single digit loan growth since last few quarters, as we are expecting the same trend to go on this quarter as well, when the overall loan growth is expected to grow by around 7.5 to 8.5%, but the deposit growth, that will grow in double digit. We are expecting a 12 to 12.5% growth in the overall deposits of the company. The gross NPAs, the overall credit cost is expected to increase from the gross NPA will increase from 1.28% to 1.4%, and there would be a slight increase in the net NPAs also. The overall rate cut cycle will have an impact on the overall net interest margin of the company, wherein the net interest margin is expected to decline from 3.97% to around 3.9%. So it would again be a soft quarter for Axis Bank, wherein the NII is expected to grow in low single digit and the loan growth trend of single digit will continue in this quarter as well.
All right, thank you so much, Varun, for getting us all those details. But not just the numbers, we'll also watch out for the management commentary, because right there at 5:15, we will get to hear from the top brass of Axis Bank. So indeed, all eyes on that. But before moving on to some of the other earnings candidate that will be in focus, Sharon, help us with the chart check on Axis Bank, given the fact that some positioning and some key levels to watch out for in terms of Axis Bank. What will those be, and how do you see the setup?
So, Shrishti, again, yesterday we spoke about this. The stock is again and again testing its support at a major support of a 100-day EMA. I think if it breaks down, it can quickly see levels of around 1120 and even 1100 for, in fact. So we'll wait for the results. Right now the chart is not too positive. It's actually looking like a sell to me, but I'll still wait for the results and won't hurry into a trade in this one.
The take on Axis Bank, waiting and watching till those numbers come out, and then maybe we'll take a call on what to do in terms of trading strategies. But while we're talking about earnings today, we also have IT giant Wipro that's going to be posting its Q1 earnings. Let's go across to Pulkit to get us more details on what the street is penciling in and what to watch out for in terms of some important factors when the numbers do come out later today.
After TCS, HCL, Tech Mahindra, now it's time for Western India Palm Refined Oil Limited, that is Wipro. So if we talk about the Q1 expectation of Wipro results, so for revenue in USD terms, we are expecting around minus 1.1% dip, For INR terms, around -2% dip. For EBIT, around -2.5% dip. For EBIT margin, 16 basis point dip. And for profit after tax, around 9.5% dip. If we talk about the segment-wise expectation, BFSI and healthcare may remain good and it can provide the good cushion to the margins. But when it comes to the manufacturing, tech, and communication, they will be soft and they might hit some on some margins. If we talk about the deal pipeline, it would remain solid, but when the revenue conversion comes in, it may remain sluggish. For the guidance that company provided last quarter for FY26 quarter one, around -3.5% to -1.5% drop in CC revenue growth was expected. Now it would be great. It would be good to see how the company is shaping up with the results. If we talk about the key monitorables in the management commentary, FY26 guidance, what company is providing would be great to see. Update on the Marelli bankruptcy impact. Marelli was one of the client, so how it is impacting to the business. The discretionary spend from the clients, the headcount and attrition trend, and most important, the tariff and geopolitical tension, how they are shaping up with the business and how it can be helpful. So it would be great to see how the company is performing and how the share will perform.
All right, so that's the take coming in on Wipro numbers that are weighted, and 4:30 is the time when we will be listening out from the top brass of Wipro. So all eyes on that and all hopes on Wipro as well. But time now to slip into a very short break in this edition of Closing Trades. Don't go anywhere, we'll be right back with more on the other side.
Hi there, welcome back to Closing Trades. Let's discuss more about the kind of market moves that we've seen in today's trading session. We have Sharan who's joined us in the studio. Before we do that, let's just take a look at the flashes on the bottom of the screen. We have numbers coming in from Polycab India. At first glance, they look like a good set of numbers because you have revenue that's come in at 5,906 crores, which is up almost 26% year on year. Net profit also looking good, almost a 50% spike coming in on the net profit front as well. EBITDA margins have expanded nicely at 14.5% compared to 12.4%, and EBITDA also has seen a good growth. Maybe what is leading to this little bit of a blip in the stock price could be the performance from the EPC segment, because if you see the numbers over there, there has been a year-on-year decline on that front. But other than that, FMEG and wires and cables seem to have done well. So that's a take on Polycab's numbers. In fact, that's what the numbers are looking like right now. We have Dhananjay Sinha, co-head of Equity Systematics Group, also joining us on the show. And Dhananjay, hi, welcome to the show. Give us a sense of the numbers, not particularly of Polycab, but if you could just give us a sense of the entire wires and cables space with the kind of competition, the recent news flow the sector has seen. The sector has been through a lot. What's your take on the space?
So I think the stock prices are actually corrected in the recent bout of correction, but I think this sector has been has demonstrated a good performance in terms of operational matrix and stuff. So I think there was a sort of a concern with respect to the infra spending by the government. There was certain amount of containment that was there. So I think in the recent past, the government has actually stepped up a lot of these spending, which is actually supportive of the wires and cables industry. So I think, and this sector has been doing really well, I would say. So it created the correction, actually created an opportunity. So wires and cables, I think, is a sector that most investors are betting on. So every dip is something that people are actually using as an opportunity. And over the last several years, I would say the sector has been doing well.
All right, so Dhananjay, for now we have seen IT disappointing, and even the wires and cables as a segment, that is the first major numbers that we are seeing that is through. But Dhananjay, a whole host of banking counters will be in focus, not just today, the coming Saturday as well. We have two major companies coming out with the numbers. Help us understand, what are you penciling in with respect to banking numbers, and any outliers do you believe that one should look out for in terms of stocks as well?
So I think if you look at the operating performance of the banking sector, I think we all know that there is a fall in the credit deposit ratio since say over the March levels, which was at a peak level. We've seen that credit growth has actually decelerated to somewhere around 9% or thereabout. If you look at the overall system, and there has been a sort of excess liquidity that has been there, and the RBI has also cut rates. So I think the issue is all about the operating matrix, the way the banking sector can grow. So I think a deceleration in credit growth is something that's not very beneficial for the banking sector. And with that, with liquidity being excess and RBI cutting rates, the pressure on margins would continue. I would say the earnings growth that we are projecting as a whole for the coverage company is working out to be somewhere around 1.7% year on year for the first quarter. I would say that which basically reflects the fact that there is a lack of other income support. That is that the fee-based income, quite apart from the fact that there is a margin compression. And I would say that this is notwithstanding the fact that there was easing of the yield, GSEC yield, and as a result of that, the yield curve actually may have given a trading profit for the banking sector as a whole. But I would say that private banks had actually done well. There has been a significant revival in the investor interest in names such as HDFC Bank, Kotak Bank, etc., and even Bajaj Finance in the NBFC sector. So there was a certain amount of rally that was there. And of course, the fact that there was sort of some strengthening in rupee, which has actually given some valuation benefit out there. But I would say that going forward, the operating matrix will be very relevant. If you have 1.7% earnings growth for banking system, it has got a very large weightage in the index. So I think that is something that people might start to shave off a little bit. So I think it's quite possible that investors might actually switch to some other sectors where earnings trajectory is relatively more resilient. That's the view on the banking sector stocks. I would say of the overall the universe of coverage that we have, HDFC Bank has got looks better in terms of earnings trajectory. There are certain tailwinds with respect structural tailwinds with respect to their cost of fund and what they're doing with respect to hiving off some of the low yielding assets. That is kind of improving the margins, or at least have a certain tailwind on the margins. And of course, they're optimizing on cost and stuff. So that's the broader thing. The overall banking sector is on a optimization mode. They're trying to draw a certain amount of profitability through optimization of cost, overhead costs, etc. So I think that's the view on the banking sector.
Okay, so that's done. And just take on the entire banking sector, what we can expect to see in terms of numbers and some of the stocks performance going ahead. But Sharon, time now to get some of your ideas for the day, some BTST picks perhaps. Where are you placing your bets?
So I like the realty space, Snehi. So you can actually go BTST and Oberoi Realty. Again, looking good. Stop loss should be just around day low. And target also equally around about that level. My second pick is CDSL. You can short around current level with a stop loss of around 1740. So since it's a short call, please do in futures and options, and your target should be around 1690. And I think it can even go lower. Looking at the numbers by Angel One and even downward trajectory in BSE and MCA, I think this stock has space to go down even more.
So that's the call coming in on Oberoi Realty. Let's watch out for this particular counter. But time now to slip into a very short break. Don't go anywhere. We'll be right back, and we'll also be joined by Arpit Beriwal just after this quick break. Welcome back to Closing Trades right here on ET Now, and we have Arpit Beriwal as well as Sudeep Bandyopadhyay both joining us on the show right now. And Arpit, barring index, because nothing is really happening over there, seem to be consolidating at those levels. Help us understand that which sector is looking good to you right now, which is seen to be picking momentum, because today is once again those days wherein a bit of a sector churning is underway. The metals, select auto counters, they are making a comeback. But anything in particular looking good to you right now?
Rightly mentioned, index is overall on the negative bias, but good stock specific action is seen. And if we see the sector overall, so selective reality stocks are relatively outperforming. And if you look at the chart setups of Prestige or Oberoi or DLF, so relatively in spite of market weakness, they're relatively outperforming. So I think reality sector is on our radar. And I think from here on also relative basis, 3 to 4% move can be seen in stocks such as Prestige, DLF, Macrotech Developer. So this sector is looking good in spite of market weakness.
Okay, so that's the take. Dhananjay, any themes you're lacking from the entire FMCG space? Before we let you go, if you could share with us any consumption-oriented themes are you liking at the point? It could be retail, it could be auto, any form of consumption, staples, discretionary. What's standing out to you right now?
So I think, see, as far as the market is concerned, I think overall earnings doesn't look great. I would say the expectations consensus is about 10% odd profit growth from Nifty. And my sense is that there will be downgrades after this earnings season as well. So I would say that markets would largely, markets will largely be around the index level itself. So I think sector rotations will happen. At this juncture, I would say that we are looking more constructively on the consumption space, both the staples, discretionary, and auto space. I would say in the auto space, we have been overweight, but I think we are a little cautious because of the rare earth magnet supply issue that might actually evolve over the next couple of months. And there might be certain issues with respect to passenger cars. We are seeing that there is a built up of inventory more than the domestic sales, and that could actually translate into a certain reduction in EBITDA margins there. I would say over there, two-wheelers and tractors are looking better. And I would say even in the EV space, it is relatively lesser vulnerable than the commercial than the passenger vehicles. So I would say tractors and two-wheelers are better off. I would say Hero Motors, etc., have or TVS has much lesser exposure to EV vehicles, so the supply issues might actually be less concerning for them. I would say in the consumer space also, I would say uh, uh, there is a certain amount of improvement that we are expecting on the volume front. We have had a very lackluster performance for the last 1 year, volume growth of about 2 to 3%. If you look at the overall staple goods sector, but I think what we are penning our hopes on is a little bit of improvement in the real wages because of the fall in the inflation levels. Though we are not very convinced about the overall income growth in the rural sector, for instance, or even I would say the urban sector. But I would say that there can be some improvement based on the fact that there is some uptick in the real wages. So we are looking at selectively we are looking at FMCG companies such as Marico. We are looking at some certain alcohol beverages company as well. GCPL is another one, Britannia, etc., Nestle. I mean, these are strong companies which can turn around in the next few quarters. So I think that is a segment that we are liking. I would say beyond that, I would say agrochemical sector has been doing very well in terms of volume, in terms of operating performance, etc. So that is another sector that we are liking. So Coromandel is one segment that we are looking at. In the textile space, Pearl Global is something that we are looking at as an idea. So there is a lot of excitement out there in terms of exports and stuff.
Jay, with this, we let you go on that. Thank you so much for taking the time out and speaking with us. And
Thank
it was
you.
interesting to know the kind of sectors and stocks that you just spoke to us about. Thank you so much for that. But for this, let's also welcome on board Sudeep Bandyopadhyay. And Sudeep, very good afternoon. Thank you so much for your time. And firstly, nothing is really happening on the index front, but a lot of sector that is underway. And along with that, Sudeep, we are waiting by for some more earnings today. And one such stock is actually Geo Financials. I wanted to understand from you that how, as an investor, should one value Geo Financials at this point in time, Sudeep, because we have seen great run up in this stock, that is one. And on the other hand, we are aware of their plans to go big in the investment division overall. They have partnered with BlackRock. But as if you were the investor hat, how will you value Geo Financials at this point in time, and what should be the strategy?
Well, first things first, I think, if you're a long-term investor and you're thinking of a time horizon of, let's say, 3 to 5 years, it's a good idea to invest in Geo Financial at current levels. So yes, absolutely, based on the tie-up, based on the parentage, based on the overall under-penetration in Indian market for multiple financial services products, the opportunity is huge. And we know how Reliance goes to the grassroots level and tries to create a culture about a particular product or service. So I'm reasonably confident that in 3 to 5 years this will be a conglomerate in itself and provide multiple financial services to customers, obviously thereby generating significant revenue and profitability as well. So 3 to 5 year time horizon, definitely worth buying at current level. But if you're looking at a very, very short term or even a, let's say 1 year kind of a time horizon, I think it'll take time for the company to set up and get scale in multiple businesses which it is talking about. And it's natural. There's no fault of anybody. It does take little time. I think market has been a little too enthusiastic and they've been valuing the stock based on future business and distant future businesses. So I would say a bit of caution is probably warranted if you're looking at a short-term kind of a time horizon. But if it's long-term, by all means, one can go and buy.
Okay, so that's the take on Geo Financial. Sudeep, thanks for that view. Arpit, coming to you, let's talk about some of the stocks from the pharma sector that are quite upbeat today. Names like Zydus Life, Torrent Pharma, Lupin, Glenmark, all of them are looking good. In fact, we have news on most of these counters like Zydus, Lupin and Glenmark. Amid this basket, Arpit, right now, which stocks are looking attractive on the charts? Where are you seeing some more or rather further upside on the charts?
So if we talk about the pharma space as a whole, we have seen a very selective stock-specific action where they talk about the healthcare or the core pharma companies. If you look at the chart setup of Glenmark Pharma, it has been a stupendous rally from 1500 to 2200 levels. So right now, if you look at the chart setup of all the pharma stocks, so selective pockets are really still promising. So first would be Glenmark. As you've seen outperformance that is there clearly in this stock, and you've seen a good rally from 1800 to 2200, but the setup is still strong. And from here on also, we can expect good rally towards 2400, 2500 positionally. Apart from this, one more counter that is looking is that is Torrent Pharma. So if we talk about Torrent Pharma, the monthly setup or the weekly setup from last almost 1.5 years, it was consolidating between 3200 to 3500, and now the stock is trying to give a breakout above 3500 levels. So a classical pole and flag breakout on the monthly scale definitely heads good towards 4000 levels. So I think Torrent Pharma and Glenmark Pharma looks good from here on also for 15 to 20% move going forward.
All right, so that's the take coming in on select pharma counters. Let's watch out for that. And yes, indeed, this time the IPM growth has been quite very strong, and that's a good and double-digit growth number post December that we have seen. And on the volume front as well, the volume has seen a pickup of 4.5%, and this numbers we are seeing after November 2023. But Sudeep, what's your overall sense on the pharma pack? Because within that, interesting developments with respect to the stock price is that yes, the large cap pharma companies are doing well, but it's the mid and the small end of the space that is picking up momentum in terms of the stock price performance, and especially those beaten down names, Sudeep. Maybe a case like Granules, Natco Pharma, they haven't participated much in the couple of quarters, but what a rebound. If you can help us analyze that, is there anything that is changing in terms of the investor sentiment, or the market is trying to look beyond 2-3 quarters and trying to pencil in that?
Well, of course, I think what changed significantly is the tariff announcement by President Trump. I think there was a sword hanging on pharma sector, and at different levels, different figures were being thrown around. But finally, when the announcement came, it talks about very high 200% or whatever, but it's after 2 years. So obviously, the people immediately started talking about the fact that probably it will never come, because if something gets pushed back by 2 years, obviously there is no threat of imminent tariff on pharma products. So that was a fantastic news for most Indian pharma companies, because most of them, or at least a lot of them, have significant business in US. They do manufacture in India and supply to US. So they would have been adversely affected by the tariff. And since that is not happening, I think that was the point from where pharma we started seeing significant momentum in large cap and some mid cap pharma companies. As far as overall pharma is concerned, I think Sun Pharma does look good, because some of the molecules which they were expected to commercialize a bit later in the year is getting preponed, and the commercial launch is happening in US very, very soon, and that kind of enthused the investors about Sun Pharma. Overall, I think they have significant business in US as well as India, and both the markets are expected to do good. The pricing pressure on generics is of course there, but I think that's kind of reached a level where we have seen the worst. As far as other mid and small cap pharma companies, of course, Glenmark did a landmark deal, and it's not only for Glenmark, for the entire Indian pharmaceutical industry. This was a landmark deal with with R&D getting established and getting properly valued by global pharma players. So this was definitely landmark, and of course, Glenmark investors were rewarded and will be rewarded further, I'm sure, in terms of dividend or other some kind of payouts. So that's as far as Glenmark and Sun Pharma is concerned. But by and large, I think Indian pharma can breathe a sigh of relief post the tariff sword going away, and I think it is back to business as usual. And considering that most other sectors are kind of still awaiting to know about the tariff and its implications, pharma is one sector where I think that has been taken care of. Hence, pharma is rallying. That's my view.
So that's a take on some of the pharma stocks and the outlook on the pharma space. Let's shift focus from pharma and throw the spotlight on capital goods. Some stocks from this sector are buzzing in today, straight on the back of ABB's global parent coming out with its numbers, and ABB India too also up almost about 2% as we speak, at the day's high is where ABB is right now, because ABB Global has reported a robust order intake in the second quarter with free cash flow of over $840 million, but the flags they've also flagged concern for their India business with order inflow down 9%. Kanishka is joining us with the details of ABB's global parents number and the impact that we're seeing on ABB right now.
Well, ABB India is in focus today after the global parent posted its Q2 numbers today. Now, globally, ABB has reported a record high order intake that is up 14% on a year-on-year basis, with revenue that's gone up 6%, whereas the operational EBITDA that has risen 9% to $1.7 billion. This was driven by strong momentum in electrification and process automation segments. Now, if we take a look at how the rest of the sectors performed, now electrification, as I said, was the top performer. EBITDA crossed $1 billion for the first time. Process automation got a boost from a $600 million marine order. On the other hand, there's motion segment, which remained largely flat, whereas the robotic segment that lagged amid tariff concerns. Now, if we take a look at how the India business performed for ABB, India order inflow that fell about 9% on a year-on-year basis. This is likely due to inventory adjustments and macro caution, despite strength in motion and robotics in other AMEA markets we have seen. In fact, despite this performance downtick that we have seen in the order intake for India, ABB India shares, they have recovered from the lowest point of the day, probably implying that the street was penciling in an even weaker performance, but it's been better than expectation. Now, looking at the outlook, ABB, that's the global parent, has given a guidance that it's expecting mid-single digit revenue growth in FY25 and steady margins alongside, while it's also keeping a close eye on the uncertain global backdrop and tariff headwinds.
All right, thank you so much, Kanishka, for getting us all those details. Arpit, help us understand that how are you analyzing the charts of ABB India, because of late, select counters within the cap goods space have been showing momentum, but any stock within the likes of Cummins, ABB, Thermax that are looking good to you right now?
So first talk about ABB. If we see overall from last couple of weeks, the stock was underperforming, forming lower highs on the weekly scale from last 3 weeks. The stock corrected from 6,100 to almost 5,400. Today we have seen some recovery from the lower levels, but if you look at the chart setup wise, broadly it is trading in a range between 5,400 to 5,750, 5,800 level wise. Talking about the overall space, so if you talk about Cummins India, relatively the stock is quite strong, where the overall index has, where the sector has been underperforming, where the stock is quite outperforming on the weekly and the monthly setup. So on the weekly setup, a classical range breakout of 3,500, 3,600, 3,550 levels, strong bullish candles, the base of the stock is shifting higher. So I think within the capital space, this counter relatively looks very strong, holding well above its 10 DEMA, and slowly steadily the stock can head towards 3,750, 3,800. So Cummins India would be a preferred pick within this space, with stop loss near 3,480 for an upside move towards 3,800 zones.
That's the take on some of the capital goods stocks on the charts right now. But while we're talking about some earnings candidates, JSW Steel is all set to report its Q1 earnings tomorrow. We also have some momentum coming in steel stocks today. These counters have been tempered for the last couple of trading sessions, but it seems like Jindal Steel, Tata Steel that are once again sprucing up, and JSW Steel also up about 0.5% as we speak. It's all set to report its Q1 earnings tomorrow. EBITDA per ton is seen to be in line with estimates. So let's go across to my colleague Ashesha to get us a sense of what else the street is expecting when it comes to JSW Steel's numbers tomorrow. Ashesha.
Well, yes, for JSW Steel this time around, scheduled maintenance at their Dolvi plant is likely to impact volumes. In fact, Saladol volumes are expected to decline by about 9% on a sequential basis, and this is likely to weigh heavy on their revenue as well. In fact, we are expecting revenue to come in at about 42,210 odd crores, which will be a decline of about 6% on a sequential basis. As far as margins are concerned, they could come in at about 17% versus 14.2% that the company had reported in the fourth quarter of FY25. Now, as far as internals are concerned, remember steel prices did rise on a quarter-on-quarter basis, and that is the reason realizations are expected to see an uptick of about 4 to 5% QOQ. Meanwhile, higher realizations coupled with lower coking coal prices are likely to aid spreads. Remember, EBITDA per ton could come in at about 11,120 odd rupees per ton, which will be an uptick of a solid 27% on a sequential basis. As far as management commentary is concerned, any commentary around Bhushan Steel and Power's resolution plan, their capex plans going forward, steel prices and coking coal prices will be crucial this time around. But all in all, margins are expected to rise sequentially, but revenue could drop on account of fall in volumes in the quarter.
All right, that's about JSW Steel. Thank you so much, Ashesha, for getting us all those details. But Sudeep, what's your own sense when it comes to the metal pack, and especially the steel? Because this time around, not much expectation, but going ahead, even the industry body is looking out for a decent price hike from these levels. Help us understand that how you're analyzing the impact of that on the stock prices in the times ahead.
Well, I think it's definitely positive for the overall steel industry. I think, we have to remember that globally also demand for steel is going up, and naturally, price hike in the domestic scenario is also expected. The uncertainty is not around demand or the price hike, but the uncertainty are company specific. JSW Steel, I think we will definitely want to hear what's their strategy about Bhushan Steel. I think that's a huge problem which has been created in the recent past post the Supreme Court order, and one needs to understand how that will get disentangled. It's very critical for JSW Steel at this stage. Of course, coking coal prices for the entire industry will be interesting to understand the trend and what the management commentary is for multiple companies, not only JSW Steel, because that's a very, very critical ingredient as far as steel making is concerned. By and large, we believe that the industry margins would have improved in this current quarter, for which results will come out. Top line depends on company specific, like JSW Steel had a scheduled maintenance, so obviously the volume will be low, but the margin improvement will be visible. So the commentary on coking coal prices and in case of JSW Steel, what's happening on Bhushan will be interesting to listen.
Okay, so that's the take on JSW Steel, but Ashesha's back with us. And Ashesha, all eyes are going to be on big boy Reliance tomorrow, all set to report its Q1 earnings as well. Now, the oil and gas 2 retail conglomerate is expected to report good show, with profits expected to jump as much as 14%. Ashesha, while the retail segment of the company is expected to do well, give us a sense of overall what can we expect to see from Reliance's Q1 numbers.
Well, yes, for Reliance Industries this time around on a consolidated basis, we are expecting net revenue to come in at about 2,45,700 crores, which will be a marginal downtick of about 6% on a sequential basis. But EBITDA could rise 2% and consolidated margins could come in at 18.3% versus 16.8% that the company had reported in the previous quarter. Now, as far as segment-wise performance is concerned, digital segment is expected to perform well this time around. Retail EBITDA, that one could decline by about 2%, but on the flip side, digital services EBITDA could rise by about 4% on a sequential basis, and this is on account of tariff hike for the telecom business that they had done in the previous quarter. As far as O2C business is concerned, that one is also expected to perform well. We are expecting O2C EBITDA to rise by about 5% on account of higher margins in the quarter gone by, which could be partially offset by refinery shutdown. But management commentary on the 75,000 crore investment that they have done in new energy business will be crucial. And apart from that, retail store addition outlook and telecom business price hikes will also be crucial this time around. But we are expecting muted set largely from Reliance Industries this time.
All right, thanks Ashesha for all those details. But just a few minutes left before we shut shop. And Arpit, help us understand that which stocks are you analyzing at this point in time with respect to your BTST or STBT ideas?
So looking at the overall market breadth, good action is seen in the selective mid-cap and small-cap stocks. But whereas if we see selective sectors are underperforming, so we would have one buy and one sell. One buy would be from the realty pack. As a sector, we have seen relative outperformance. And within that, Prestige Estate looks very strong. So if you look at the chart set of Prestige Estate, a classical range breakout on the weekly scale after almost 6 weeks. Sharp uptick has been seen in last couple of minutes. So overall, the setup wise is very positive and looks good towards 1820, 1840 levels. We can revise the stop loss from 1725 to 1740 levels. Second would be from the defense pack on the sell side. So if you see defense sector has seen some pain from last few sessions, and it is kind of a top out pattern in like on the weekly and the monthly setup. So if we look at the chart setup of BDL, that is Bharat Dynamics. So a classical range breakdown on the weekly scale below 1800 levels, forming lower highs on the daily scale. So the stock looks weak and further weakness can be seen towards 1680 levels. So BDL would be a short sell idea for July's futures. We can short sell with keeping stop loss of 1810 for a downside move towards 1680 zones.
Okay, so that's a sell coming in on Bharat Dynamics, but a buy coming in on Prestige Estates. Sudeep, before we wrap up, quick thoughts on what we can expect from Reliance this time. Lots of segments that have, now gained more share in the overall pie, if you could call it that. Retail is expected to do well also. Give us a sense of what we can expect from the overall numbers.
Well, we do expect a positive set of numbers overall. As you rightly said, the new generation businesses will definitely be doing well. Telecom, they are the leaders, and ARPU increase which they have taken, the price increase which they have taken will lead to ARPU increase, and that will flow through in P&L fully this time. Retail, as you rightly said, after restructuring is expected to show good set of numbers now. New energy has started contributing, we understand. And of course, today FMCG is under retail, but I think it's getting segregated. So FMCG numbers, if they're talking about separately, that will be interesting to know. The traditional O2C business, I think, we'll have to see what happens to the pet business, because Petchem was under pressure for quite some time. So we'll have to see if the refinery shutdown will have impact on the margins, overall margins. But by and large, I think it will be a stable and good quarter for Reliance.
All right, so that's the take coming in on Reliance. Let's watch out for that. That'll be interesting to see how the commentary turns out to be for the different segments overall. But the markets are Getting lower because it's Nifty Bank that is now down 365 odd points, and Nifty 50 is now retesting that 25,100 level for itself. Select consumer counters that have been doing well, select metal counters are seen to be making a comeback, and select auto counters, case in point being M&M and Hero MotoCorp, are some of the top picks, or rather the top gainers on the Nifty 50 side. But one such stock that has been doing well is actually Hero MotoCorp. Sharon, anything in particular that you are liking with this particular stock? Because off late a good comeback is what we have seen for this stock.
So Shrishti, I think the stock is on a verge of a big breakout after nearly a consolidation since December. I think almost 7 months. I think it's on a verge of a breakout. Any close above 4,500 on even on a 15 or 30-minute candle can take the stock to 46 to 4,700. Even if someone wants to initiate a long position, can do so with a stop loss of around 4,350 on a daily closing basis. The stock is looking very nice. Nice accumulation in the last 2 months since May and June. So again, looking very good on the charts, and I think it can break out anytime soon over 4,500.
Sharan, very quickly before we start wrapping up for the day, any level that you're spotting where we can expect to open tomorrow, given that we've consolidated today?
So again, Snehi, like I've said many times, 25,100 is an immediate support, and I think Nifty is more or less closing around about that level also. So you can expect a good, like a 15-20 point gap down opening around about that level. And post opening, and if Trump doesn't tweet anything today, I think it should open about that kind of level. Yes, banks are a little bit on the downside because they have seen continuous rally in the last 1 or 2 days. So Bank Nifty, you can expect immediate support around 56,500 odd levels.
Okay, so that's the levels to watch out for on the Nifty and Nifty Bank. But with that, let's start wrapping down for the day. Arpit, as well as Sharan, as well as Sudeep, thank you so much for joining us on the show. With that, 1 minute left. Let's just take stock of what the closing rates are looking like right now. Nifty, a day of consolidation, about 100-point cut on the spot basis, and slightly more than that from the day's highest point. About 0.5% lower is where we're closing for the Nifty. Similar cuts coming in for sensex right now, around 82,300 is what we're trying to hold on to, but that seems a little difficult right now. Advanced decline ratio quite even Steven, so let's see what the India Wix is up to in today's trading session. It has been cooling off, so you'll have the India Wix that's spiked up, nonetheless a very minor spike, a 0.3% uptick coming in on the India Wix. The broader end of the market also has not done anything today, albeit the losses have been lower than the benchmarks. Nifty mid cap is lower by just 0.2%, and Nifty small cap too, just a 0.2% cut coming in. It's names like some of the names that were doing well on the Nifty, like Tata Consumer, Tata Steel, Hindalco, Trent, M&M, Tata Motors doing well. On the flip side, you have losers from Tech Mahindra, IndusInd Bank, Infosys, SBI Life, Wipro, HCL Tech and Eternal continuing to be in the red for the third straight day. So that's how we're wrapping up for the day. We'll give those rates some time to settle. It seems like we have held on to that 25,100 mark. Nonetheless, a 0.4% cut coming in on the Nifty. But with that, we'll wrap it up on this edition of Closing Trades. From Shrishti, me and the team that put this show together, thanks so much for tuning in.